How often do you think about your heart health? Are you aware of the risks of cardiovascular disease? Well, let's dive into the heart of the matter. Cardiovascular diseases, encompassing coronary heart disease and stroke, claim the top spot as the leading cause of death in the United States. Particularly at risk are Blacks and Hispanics in underserved communities. It's a sobering reality, isn't it? But there's good news. Cardiovascular disease is largely preventable. Stay tuned to learn how you can keep your heart beating strong. Heart Smarts, a health program, is here to empower you to live a heart-healthy lifestyle. This program is not just about information, but about transformation. It offers a comprehensive approach to help you understand and achieve heart health. Heart Smarts is committed to reducing the incidence of cardiovascular disease, the leading cause of death in the United States. The program focuses on underserved communities where the risk of heart disease and stroke is greatest. Through education and empowerment, Heart Smarts aims to turn the tide on these statistics. It's a call to action, a call to change, a call to live healthier, longer lives. Heart Smarts is about arming you with the knowledge and tools you need to make heart-smart choices every day. It's about the power of prevention and the promise of a healthier future. Remember, Heart Smarts is not just a program, it's a life-changing journey. It's about taking control of your health, one heartbeat at a time. But don't just take our word for it. Listen to these stories from people who have benefited from Heart Smarts. Imagine being told you're at risk for heart disease, a leading cause of death in the United States. Now picture having the knowledge and tools to combat that risk head-on. For people like Maria, a single mother from an underserved community, Heart Smarts was a beacon of hope. The program informed decisions about her heart health, ultimately reducing her risk of cardiovascular diseases. And then there's John, a middle-aged man who was once a prisoner of his poor lifestyle choices. For him, Heart Smarts was not just a program, but a lifesaver. It opened his eyes to the risks he was taking and gave him the push he needed to commit to a healthier lifestyle. These are not just testimonials, they are life-changing stories. Stories of empowerment, resilience, and triumph over heart disease. These are real stories from real people who have seen the impact of Heart Smarts in their lives. Are you ready to be the next success story? Your heart health is in your hands, and with Heart Smarts, you have the power to make a difference. It's time to take that first step towards a healthier lifestyle, a step that could redefine your future. Heart Smarts is not just an ally, it's a beacon, guiding you to make informed decisions for your heart health. So why wait? The path to a healthier heart is just a click away. You'll find the link to Heart Smarts right down in the description below. Start your journey towards a healthier heart today with Heart Smarts.
Ever wondered how your credit score is calculated and how it impacts your financial opportunities? Let's pull back the curtain on this financial mystery. Picture this, you're a lender, and someone comes asking for a loan. How do you decide if they're a good bet or not? You'd want to know their financial history, right? That's where credit scores come in. Imagine credit scores as a financial report card. Just as teachers evaluate students based on their performances, lenders evaluate potential borrowers using credit scores. It's a 3-digit number, typically ranging from 300 to 850. The higher the score, the more likely you are to get that loan or credit card you're eyeing. But where does this number come from? It's not a random lottery, but a calculated result based on your financial behavior. Credit bureaus, the entities that calculate these scores, scrutinize your financial past to predict your future behavior. They look at how promptly you've paid your bills, how much debt you have, and even how long you've been handling credit. Credit scores are like your financial reputation. They open or close doors to various financial opportunities. Looking to buy a house or a car? Your credit score will influence the interest rates you're offered. Even landlords and employers sometimes check credit scores to gauge reliability. In essence, your credit score is a key player in your financial narrative. It's a reflection of your financial discipline and trustworthiness. It's not something to be feared, but understood and improved. So we've established that credit scores are crucial. They're the deciding factor in many financial transactions. But what exactly makes up a credit score? Let's dive deeper. A credit score isn't just a random number. It's made up of 5 key components. First, let's dive into payment history. This is the record of your payments on all types of credit, from credit cards to mortgages. It's the most significant component, making up about 35% of your total score. Timely payments boost your score, while late payments, defaults, and bankruptcies can cause it to plummet. Next up is credit utilization. the ratio of your outstanding credit card balances to your credit card limits. This makes up roughly 30% of your score. Financial experts generally recommend keeping this ratio below 30%. So if you have a credit card limit of $10,000, try to keep your balance under $3,000. The third component is the length of your credit history, which accounts for about 15% of your score. This considers the age of your oldest account, the age of your newest account, and an average age of all your accounts. Longer credit history tends to show lenders that you're a reliable borrower. The fourth component is the types of credit you have, contributing to about 10% of your score. This includes installment loans like auto loans or student loans, revolving credit like credit cards, and open credit like charge accounts. A mix of different types of credit can improve your score. Finally, we have new credit inquiries, which also make up about 10% of your score. Each time you apply for new credit, a hard inquiry is made on your report, which can slightly decrease your score. However, these dings are temporary, and your score will recover over time. Remember, the aim is balance. Maintaining a mix of credit types, keeping utilization low, managing new credit inquiries wisely, and most importantly, making payments on time will steer your credit score in the right direction. Each of these components carries a different weight in your overall credit score. So, understanding how they work is the first step towards taking control of your financial future. So, how does your credit score influence your financial opportunities? Well, let's delve right into it. Think of your credit score as your financial report card, and just like in school, the better your grade, the more opportunities you have. Let's start with loan approvals. When you apply for a loan, lenders look at your credit score to determine if you're a risky investment or not. A higher score implies you're a reliable borrower, increasing your chances of loan approval. But it's not just about getting approved. Your credit score can also impact the terms of the loan. This is where interest rates come in. If your credit score is high, lenders see you as less risky and are more likely to offer you loans with lower interest rates. On the other hand, if your credit score is low, you may end up paying higher interest rates, which means the loan will cost you more in the long run. And it's not just loans. Having a good credit score could also mean lower insurance premiums. Insurance companies often use credit-based insurance scores to determine premiums. A better credit score could mean lower premiums on auto and homeowners insurance. But wait, there's more. Your credit score can even impact your job opportunities. While employers can't check your credit score, they can request a modified credit report. This could be a deciding factor, especially for jobs that involve handling finances. A poor credit history might signal potential issues with financial responsibility. So you see, your credit score acts as a key to unlock various financial opportunities. It's like a passport, opening up a world of possibilities. It can affect everything from the type of house you can buy, to the car you drive, to the jobs you can apply for. Clearly, a good credit score opens up a world of financial opportunities. But how can you improve it? Well, stay tuned, because that's exactly what we're going to talk about in the next scene. Improving your credit score might seem challenging, but it's definitely achievable. Let's delve into some strategies that can help you on this journey. First off, paying bills on time is essential. It may seem like a no-brainer, but late payments can significantly dent your credit score. So whether it's your electricity bill or credit card payment, make sure to pay promptly. Automating your payments can be a handy tool in this regard. Next, reducing your amount of debt is another crucial step. It's not just about paying off your debt. It's also about keeping your credit utilization ratio low. This ratio, which compares your credit card balance with your credit limit, should ideally be below 30%. So, if you have a credit card with a limit of $2,000, try to keep your balance below $600. Now, you might be tempted to close old credit cards, especially those that you no longer use. However, doing so can negatively impact your credit score. Old credit cards, particularly those with a good payment history, can contribute to a longer credit history and a lower credit utilization ratio. So hold on to those old cards, even if you don't use them often. Another tip is to limit new credit inquiries. Each time you apply for a new line of credit, a hard inquiry is carried out, which can slightly lower your credit score. While one or two inquiries might not make a big difference, several can add up. So, apply for new credit only when necessary. Finally, remember to regularly check your credit report. It will help you stay informed about your credit status, and also allow you to spot any inaccuracies that might be pulling your score down. You're entitled to one free report each year from each of the 3 major credit bureaus, so make sure to take advantage of this. Remember, improving your credit score is a marathon, not a sprint. It takes time and patience, but with these strategies in hand, you're well on your way to a better credit future. Understanding your credit score is the first step towards financial literacy. In our journey today, we've unpacked the mystery of credit scores, revealing its 5 core components: payment history, credit utilization, credit history length, credit mix, and new credit. Each of these elements plays a unique role in shaping your credit score, a 3-digit number that's more than just a number. It's a reflection of your financial health and trustworthiness in the eyes of lenders. We've also explored the far-reaching impacts of credit scores on financial opportunities. From securing a mortgage for your dream home, to obtaining a loan for a new car, or even starting your own business, your credit score is often the key to unlocking these opportunities. It's the figurative door to your financial future, and maintaining a good credit score can keep that door wide open. But what if your credit score isn't where you'd like it to be? Don't fret, we've got you covered. We've shared several strategies to improve your credit score, including making payments on time, keeping credit balances low, and being judicious about opening new credit accounts. These aren't quick fixes, but rather, they're ongoing efforts that can gradually, but surely, boost your credit score. Remember, improving your credit score isn't a sprint, it's a marathon. It requires patience, discipline, and a commitment to making informed financial decisions. But the rewards? They're well worth the effort. A higher credit score can lead to lower interest rates, better loan terms, and more financial freedom. It's your ticket to a brighter financial future. And so, as we wrap up, let's not forget the importance of continuous efforts to maintain and improve our credit scores. It's not a one-time endeavor, but a lifelong commitment to financial health. So keep an eye on your credit score and